We are here today. We've got some nice mimosas.
Cheers.
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 Cheers. We are going to talk about loans and what's going on in the market today. And we have Pat here. I'll let Pat introduce himself and talk a little bit about your business so we know a little bit more of who we're talking to today.
Cool. Thank you for having me on.
Oh,
Appreciate it.
Very
Thank
welcome.
you.
And I love the mimosas.
Oh,
Awesome.
They're so good. This is a great. So share your tip for
Yes.
a second, Candace.
First of all, thank you, Nicole, for the frozen
thank you,
ice
Nicole.
cubes.
This is a really good tip.
Yeah, it really
Would you
is.
say
Yummy.
that?
Yeah.
It's
Yeah.
frozen ice cubes. So you squeeze orange juice, freeze them, and then you pour your nice Prosecco on top.
Who would have thought you get a market update, you get a lender, and you get tips on how to
Mixology,
make a good
right?
Mixology, how to make a good mimosa.
You know what we should do next time is do like a whiskey cocktail.
No,
We talk
maybe-
about a whiskey cocktail.
Well, we could. Mixology.
Right,
we like to
right.
mix it
Whine
up.
about
Right,
real
right.
estate, whisking about
Right,
real
right,
estate.
right,
You know,
right.
we
We'll
can
call
get
it whatever we want.
As long as we don't get too drunk, we're okay.
Right.
Make promises we can't keep.
Right? Okay, so we're going to let Pat take the reins here, and he's going to give us a market update.
Yeah, let's
Right.
talk about the market right now.
Thank you. So what's going on right now is the market's in a little bit of upheaval. We thought we were going to get a rate cut in March from the Federal Reserve. But what the Fed is seeing, there's a little bit of strength in the economy. And we saw that with the unemployment numbers last week, where they actually went down instead of going up where everybody expected. What we saw, well, hold on a second.
I'm ready to get another sip.
Yeah, so we're seeing that there's certain parts of the economy that are doing better. Some are doing terribly. What we are seeing is there's a lot of layoffs, and a lot of folks were thinking, well, maybe the numbers are just getting a little sugar-coated, because who's issuing the numbers? It's really the current administration, and we have the elections coming up.
Right.
The Fed is trying to stay neutral. So
Makes sense.
yeah, but what the Fed is doing, they're putting cold water on any kind of expectations. So at this point, we're expecting a rate cut sometime beginning in May.
Okay.
And what they're going to do is a May, June, July, and September rate cut, all consecutively.
So that takes care of the four that I've been hearing.
Exactly.
Okay.
And there may be one in December. It depends what the economy's doing. The problem here is this. Last Wednesday, Thursday, we actually were hitting rates in the 5s for conventional business.
Yes.
Now, average rates are shot up to almost to 7, just in the span of 2 days.
Just to interrupt you for a second, sorry, Pat. My VA buyer just locked 5.85.
Right.
So I think they hit it right perfectly.
Correct.
Because now look where they are.
Well, and that's really conventional business. For FHA, we locked somebody on Thursday at 5.625%. The next day, it shot up to 6%.
Oh.
So it just got, you're right, your guy just got in at the right time. But we saw conventional business. This is the Fannie Mae, Freddie Mac stuff that you see with the banks. We were getting them at 5.875. And we had the commentary that, well, I'm just going to wait for it to come down a little bit lower. And then the next day they call me, Pat, is it true? It's like, yeah, rates are higher. So listen to Uncle Pat here. If you want to lock a rate, lock it now. Don't think it's going to come down anytime soon, because I do think we get kind of these really shots down and then goes right back up, because the Federal Reserve will start speaking. And the way you know they're speaking is they do these luncheons, they do these speeches that they give to updates to these trade associations. That's how we get the Fed minutes, to really see what they're thinking. And what they're thinking is no rate cuts till May.
Okay.
So I have a question with that then. Let's say a buyer comes to you today, they lock in at, the 6% rate, but next week the rate goes back down to 5.5 again. Can they adjust their rate back down?
Yes, there's a way to do that.
There is.
Yes.
Okay.
So what we do is, one of the ways I do business is I'm a broker. I'm not a bank. I work with about 80 different lenders. And so if I, for example, lock with one lender and then rates go lower, I'll just flip it over to the other lender and I can reuse an appraisal. I can reuse almost the same documentation. All they're really signing is an extra pair of initial disclosure documents. That's it. So we make that promise to everybody that if we lock you in and rates go lower, we will move you.
Okay.
But it's got to be more than 0.001. You know, it's got to be like 8 to a quarter
It's gotta
percent.
make sense.
Yeah, exactly.
Yeah, okay.
But at the same time, let's just say you have somebody saying, well, I don't want to buy right now because,
Right.
Rates are a little high. Well, here's the thing. We know values are going to go higher.
Right.
We
So-
do know that.
Right. So what we're telling people, hey, buy it now. Pay the rate now. When the rates go lower, we can refinance. None of our loans have prepayment penalties. And the cost is negligible. Sometimes we're even able to pick up the entire cost for the refinance. points.
Wow.
Nice.
So, it's the smart money's buying now. We have deals going from 300,000 to 10 million right now.
Wow.
Because people are just know that they're going to go higher.
They know they're going to make their money.
Exactly right.
And the people that trust the market and know that, hey, listen, we need to get in right now, because they're smart enough to know that we can always refinance.
Right.
We can always change it. But I would listen to Uncle Pat, and I would definitely say, buy now, don't wait. From what I understand, we're going to gain anywhere between 4 and 5% equity this year on our homes.
I would say closer to 10.
Wow, that's a bold statement.
If you look at last year, in 2023, when the numbers are finally said and done, we'll be anywhere between 10 and 15% equity growth.
Wow.
Especially up here in the Sacramento, Roseville area, right?
Number one growing area.
So it's kind of funny, because when I go out and I meet people, everybody just makes a comment. Great, you transplants. You come here, you buy up the property, you make it so expensive for us to live here. Well, that's true, but it's the same kind of money that what people are doing is they're selling their Bay Area properties, and they're taking all that money and bringing it up here.
Yes, they are.
And the equity is just crazy. I mean,
100%.
they're able to come in, buy up these properties, and that's why you've seen constant growth up here. That's why we moved up here, because we just. You've been telling me for 10 years, get the hell out of the Bay Area, and I finally listened.
I have.
And
if you guys didn't know, Pat is also my family.
Yeah.
And my very dear cousin's husband. And Pat and I frequently talk, and it's great because I feel like I have insider information sometimes.
Yeah.
And it's really helpful.
Right.
So
the key part is also not to get stuck in the weeds.
Yes.
Don't be just a lot of times you're just seeing a couple of feet in front of you. You're not looking at the big picture. And people, look, this is people's number one asset, number one purchase they will make in their life.
Agree.
The biggest one.
The biggest
so
one,
you got to be a little patient, but at the same time, sometimes, hey, you buyers out there, we just want to shake you and get out of your own way, because a lot of you get in your own way.
We're trying to help you.
Yeah, exactly.
Let's build wealth together.
This is not just about the deal, because trust me, it's not.
Yeah, nope.
In our line of work, I've been doing this for 21 years.
Right.
In our line of work, it's never just one deal. I've lost money on the first 2 or 3 deals that I've had somebody, because it was a trust thing. And then eventually, fine, we need to make a living too. We'll make our money. But listen, we do this for a living. We're not fly-by-nighters. We don't do anything else. So the key part is we want you to do well, because it doesn't help us if you don't do well.
Right.
Sure.
So my advice is, hey guys, we understand there's a lot of stuff goes on. Listen to us. At least give us the shot to talk to you, because that's going to make a big difference in how you make your decisions.
Well, I think a lot of people, we were just talking about it today, a lot of people get stuck on that price.
Yeah.
Purchase price, listing price, it's all going up, and it's going to continue to go up.
Right.
We just discussed that. The equity is going to climb.
Yeah.
And people get stuck on that price, and a lot of buyers are going, oh, I want to wait till the prices come down. I want to wait till the prices come down. But at the end of the day, they don't realize that the price isn't necessarily negotiating their payment. It's that interest rate.
Right.
And when
100%.
those interest rates go down, that's when you get in there. And that's the golden one. And I think that conversation is probably not being had with a lot of buyers.
Yeah. Well, and I'll tell you, I like to say, you can always refinance an interest rate, but you cannot refinance a purchase price once you've already bought it.
100%.
So really what's happening is, yes, look, nobody likes a payment. Nobody likes the payment they ever get. They always want it lower. I have yet to meet the person that says, I want to pay more.
Right.
Woo! But at the same time, how many people have not bought over the last 12 months? And now they come back, I'm ready to buy now. Well, guess what? That house you wanted for $500, now it's $550. Or now it's $600.
100%.
That's exactly what we were
Oh
seeing.
my God, yes. All the time. It's a common theme right now.
Mm-hmm.
Yeah, and I feel
shoulda,
bad.
woulda, coulda.
Yeah, right. Shoulda, woulda, coulda. And what we try to do is stay in touch with everybody once a month at a minimum. We do a lot of emailing. We do a lot of texting, that kind of a thing, because, there's a lot of stuff that goes on in somebody's life that we don't know about. Hey, do you have some personal issues that are going through? Right. Is there work issues? Is there sickness? Is there whatever? So a no on January 1 may not be a no on January 15th or January 30th. So, to me, that's very important, just to stay in touch. Hey, what's really going on? I'm a big cocktails guy. I like to take people out for coffee, for a glass of wine.
Yes, he does. Hit him up.
I do.
So these mimosas
Yes,
are a great
yes. Not going to say what time of day we're recording this.
No, no.
But no,
it's 5 o'clock somewhere.
Exactly right. So,
100%.
but we understand, and that's the thing. We do understand, but at the same time, it's kind of like we also are doing this 24/7. We live and breathe this stuff.
Absolutely.
We see the market, and just because you're going on Zillow or Redfin doesn't mean you know what's going on in the marketplace.
Probably means you don't.
Exactly right. Yeah. So exactly. So
with that being said, Pat.
Yeah.
So is there any other things that we should know about with this market update that you haven't already told us?
Yes, there is. Be very careful on where you're buying. And in terms of, and you guys probably know this better than anybody, in certain parts of the area, insurance is a little tougher right now.
Well, we know that 100%.
Yeah, we've been talking about that several times.
Do you know, I don't know if you know this, but Lincoln has a really big country club. It's called Canavedera.
Mm-hmm.
Beautiful
country club.
$1 million home.
Yeah, actually I know it, yeah.
They cannot.
Really?
Down here.
Wow.
Yeah. So it has definitely been a challenge, but when you do find those really good insurance agents, we definitely hang on to them and refer our clients because they're the ones who are able to help us get the deals closed.
You actually referred a really good one to me. I sent him 3 deals already. Jason.
Oh, yeah. Yeah,
he's awesome.
I know. Jason's wonderful. Jason Spears, Farmers Insurance. He's wonderful.
Yes. So the other thing that I'm seeing in the marketplace right now is lenders are starting finally to loosen up on some of their programs.
Oh, okay.
So we actually have 100% financing one loan program.
Is there a name to that?
Just the 100% one loan FHA.
Is that, so it's FHA.
Yes.
So that means this is for an FHA loan only.
Yes.
Okay.
And what they do is they'll finance the entire purchase of the property. Sometimes we're even able to get credits from the seller to cover the closing costs. Mm-hmm. And once you sign the paperwork and the house becomes yours, they automatically forgive 3.5% of the loan. So if you bought for $100,000, let's just say, your real loan amount will be $96,500.
How can they do that?
Because they have an internal program where it's they've gotten a big grant for $200 million to spur on home ownership. So they have to give it out. They can't spend it. They can't keep it.
So this is the way they're dispersing.
Exactly right.
They're saying, okay, you just said. So is it 3.5%?
3.5%.
So they're basically giving you 3.5% money.
Free money. Free money.
Did I just hear free money?
Yes.
Free money. That sounds like
free money. We drink.
Anytime we hear free money, we drink.
Wow, I got to come here more often.
We know how to have fun.
Yeah.
So 3.5% free money. I think you guys shouldn't walk. You should run.
Yeah, it's a really great loan to take advantage of.
Because as we get more into the spring market, and just like Pat said, when those interest rates start dropping May, then there is going to be buyers coming out in droves, and the competition is going to be nuts.
We already are, by the way. We're taking 2 to 3 new applications a day.
I believe you.
So I have a question with that then, because I've heard of the Cal Half loans, and
right.
It's a lottery system.
Right.
Oh, is this that dream program you're talking about?
Completely different.
Oh, okay.
Not having to do with that whatsoever.
Okay, so this doesn't have to do with the dream program.
No.
So you just came up with your own dream program.
Kind of, yes.
You're making dreams.
I am Mr. Moneybucks here. I'm just throwing it all out. No.
Here we go.
But no, I mean, really, the Cal Hapa, it served its purpose. I don't actually care for it.
Okay.
It puts the borrowers and the buyers through such a circus.
I agree with you on that.
I
feel like it's a real letdown. You're like, oh God, I hope I win that lottery system. And then you get into it, and then you're like, oh my God, I hope we can do. It's all these I hopes. Let's just go with the sure thing.
And there's one more thing.
Huh.
What they're not telling you. When they're looking to the lottery, one of the things that they look at is needs-based.
That makes sense.
Because if you're making $300,000 a year, why do you need down payment assistance?
They're not going to give it to you.
They're not going to give it to you.
Yeah, right.
And by the way, we have to submit the income to them.
Right. So it's based on income.
Yeah, exactly.
Yeah. So what's great is the alternative, the 100% financing with the FHA with 3.5% forgiven.
Free money.
And then on top of that, of course, if you're in a situation where you can ask your realtor to also negotiate, get strategic, negotiate your closing costs. So what does that mean for you? That means you're coming in with nothing.
Exactly.
And you're actually gaining 3.5% equity before you even step into your home.
Yeah, you're literally getting free money to buy a house.
Right. Well,
nothing's coming out of your pocket. And then when is your first payment due? Is it 30, 60, or
30 to 60 days afterwards? You usually skip 1 month.
Right.
I try to skip people 2 months of payments.
Yeah.
Wow. Because now let's back up a little bit and the reason you can do that is because we're kind of collecting that all up front.
No, actually no.
Oh, okay.
So normally you have to be in a loan for 30 days to have to pay for it in a mortgage. This is not a credit card where you pay ahead of time or like a car loan.
Right.
No, you have to be, a federal law states you have to be in the loan for 30 days to make your first payment. However, let's just say, for example, we close the loan sometime in the middle of February, using this example.
Okay.
What we'll do, a mortgage must start on the 1st. So if you're closing in the middle of the month previously, you'll take 15 days of interest, plus you skip the month. So you're paying essentially 15 days of interest, which could be, let's just say your mortgage payment is, I don't know, $2,000.
Okay.
The days of interest won't be more than $500. So you're skipping, you're paying $500 to skip $2,000. Makes all the sense in the world.
Yeah, absolutely.
You know? So it's just, I mean, it's a game we can play to see if we can save you that money. If the closer you get to the end of the month, the less you can save, obviously. But it does help a lot of folks out from that point of view. Now, at the same time, that's an FHA loan. The other loan that we have is where you're coming in with 1%.
Oh, let's hear some more about that.
That's a conventional loan, not an FHA loan. So they're issued by two different agencies. Conventional loan is what you hear from Fannie Mae, Freddie Mac. You're not paying as much mortgage insurance. FHA is done through HUD, Housing and Urban Development.
Right.
The mortgage insurance is a little bit higher. So your costs are actually cheaper on that 1% loan.
And what he's talking about is PMI, your private mortgage insurance.
Exactly.
And that's tacked onto your payment.
Correct.
Yes.
So
anytime you go below 20% down payment, you have to have mortgage insurance.
Yes.
Thank you for that. So this is, we're switching gears. So this is a 1% conventional loan. Regardless of the FHA 100% or the 1% conventional, what's your FICO score have to look like? What's your credit score have to look like?
Well, so on the FHA, we can actually go down to 600.
Whoa.
Okay.
Yeah.
That's crazy.
That's pretty crazy, right?
Yeah, that's huge.
Right. Now, obviously, the better the credit score, the better the rate. The lower the credit score, the lower the rate.
I mean, that makes total sense.
Right.
Yeah.
But what repairs the credit score the best is a mortgage.
Yeah.
So,
true.
So that's one part. The conventional piece, your credit score will have to be probably 660 to 680.
Got it.
But the rate and the payment will be a lot lower.
So what does the rate look like if you're in a 660, 680, 1% conventional loan program that you're sponsoring?
You're probably mid to high sixes.
Oh, okay.
It's not bad.
No, not at all. I mean, that's pretty good considering that we were just at 7 or 8, in December.
Yeah, exactly.
Well, okay, so let me talk this then, because this is a conversation I've had with my buyers before, talking about interest rates. To me, and what I've seen in the 9 years of real estate that I've done, 5.5 is probably the average good rate that a homeowner should probably have, right? Or what is your honest, because that 2% is a golden rate. That's like
you're not going to see that again.
Yeah, I mean, unless somebody buys it down, I don't see a 2% rate coming back. 5% is an average, 5.5, I would say, is average.
That's a national average over the years of real estate, wouldn't you say?
What I'm seeing right now, for the people that have bought over the last 5 to 10 years, the average rate is actually between 3 and 4%.
Oh,
yes.
Okay.
So right now, it's a little difficult to get 5s. We saw 5s about a week ago.
Right.
So what I think is going to end up happening is we will get to the low 5s by the end of the year.
Right.
I think we'll get in 2025. I can't believe I'm still getting confused. 2024, 2023. I'm having trouble remembering.
Because it's so new still.
Right. Exactly. It'll take a couple of months from now. I'm an old man. Sorry, I'm an old man.
I blinked and it was 2020, and now we're in 2024.
Yeah, exactly.
When did that happen?
Exactly right. We're still getting over New Year's, but anyway.
We're still celebrating.
So
apparently.
So I think by 2025 we'll be probably in the 4s. it really depends what happens with the economy. Can we hit 2% again? I think so, but it's going to have to be an extraordinary event. Like COVID brought the 2%.
Exactly.
Yeah.
Right.
That's what I agree with that. It has to be, there has to be a big.
But I will tell you, it's kind of funny because you guys pointed to it before. People are so in love with their interest rate. It's like they want to go to a party and tell their friends, well, I got a 1.5% 30-year fix.
Oh, yeah.
Like somehow you're the Monopoly guy.
Right.
It doesn't matter what the interest rate is. It matters what your payment is. All the interest rate helps determine is the payment.
Correct.
Now, there are some people out there that have wonderful interest rates, and if they have no debt, great. Mm-hmm. But what we're starting to see now, a big market trend, is people are starting to put a lot more on credit cards.
Yeah.
As a national debt, there's over $1 trillion in credit cards. That's going to be almost as much as the student debt crisis that we have going on right now.
Yeah.
Oh my gosh. So that, just tells me right there with your 100% FHA financing, your debt to income ratio, that is where that loan's really going to come in.
Exactly right.
Help, especially if you have a high credit card statements.
Exactly right. Because the average credit card interest rate is 20%. 20%.
Isn't that crazy? People are willing to pay that much on a credit card, but then I understand that the house is something thousands and it makes all that, but it's just crazy to me that nobody really, they'll go and finance a meal for 20%.
Yeah, exactly.
It blows my mind.
No. It's because it's kind of one of those things, what did they say about a donut? A lifetime on the lips, or a moment on the lips, a lifetime on the hips. Same thing. Same thing with a credit card. It's a momentary pleasure, and then you're paying for the next 30 years.
Yes, an impulse.
Because the minimum payment, and this is what people don't realize, the minimum payment on the credit cards is interest only. Mm-hmm. You may be putting $5, $10 for the principal. And this is where I'm kind of coming to. I talk to a lot of people, they say, Pat, I need to figure out how to consolidate my credit card debts because I have 50,000 credit card debts. Took a vacation, going out to dinner every night. So great. You have a 2% rate.
Do you have, I'm sorry to stop you. I apologize. Do you have a credit card recovery service that you directly work with to help people restore their credit?
So it's the credit, yes.
Credit recovery. What do they call it?
Credit repair.
Credit repair.
Yes, okay. I do. But here's the one thing you'd never want to do. There's these credit consolidators or debt modifiers, like Freedom America or stuff like that. They'll go out there and say, hey, we're going to negotiate a lower rate for you or lower payoff for you. Don't ever, 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 ever do that. Because here's what they're going to do.
That's ever.
And let me explain to you why.
Ever.
What they're going to do is they're going to reach out. You're going to stop payment. They're going to say, you're going to stop paying for 6 to 12 months. It's going to destroy your credit. Mm-hmm. Then they're going to come in and they're going to say, hey, listen, this person has not paid for 6 to 12 months. You're never going to get this money. Give us a deal where we can negotiate a lower payoff. Sounds great, right? Paying less than what you had to. Well, guess what a lender is going to look at? When I take a look at that credit report, and here we have Joe Smith. Joe used to have $50,000 in credit card bills. And the credit report will say, but he paid off less than was owed. As a lender, you're done.
Right.
Why would I lend money to somebody that is not paying their bills?
Right.
Best intentions, I want to get rid of the credit card debt. I get it. And it sounds wonderful. But you have to look at it what's going to hurt you. It's going to hurt you for the next 5 to 10 years.
Wow.
And that's because a lender is looking at it from the point of, I'm going to lend you money for your home.
Yes.
And I expect to get it back. And I'm looking at your history to show me, okay, they have paid off debts before. They've paid off their
exactly. The more you pay,
if I'm not going to get it back, I don't know.
Why would I lend money to you? Yeah,
like that. Yeah,
it's like that friend that keeps coming to borrowing $50, $100. I'll pay you later. I'll pay you later. After the 5th time, you give him the $50 or $100. It's like, dude, you're going to pay me back sometime, right? Yeah, I don't really have the money, but I need another $50 to $100.
Right? Can I have more?
Yeah, exactly. Those are the people you can leave out the front door. You can't.
Right.
So here's the thing, and this is what people don't understand. Going back to the interest rates, having a 2 or 3% interest rate is wonderful. It makes you feel good when you go to bed and wake up in the morning. But you also have a 20% credit card bill for $40,000. A lot of times, if we consolidate those two in a refinance, the average rate will probably go from 2%, let's just say, to 3.5%, 4%. But your payments, overall payments, will actually drop by about $1,000 to $1,500. But people are so in love with the rates. It's like my precious. I don't want to let it go. It's like my precious. Lord of the Rings.
You only laugh because you know sellers like that.
Yeah, exactly. It's but they hold on to it for dear life, and they would rather go into the poorhouse than save $1,500 a month.
Because they get hung up on a certain number, whether it be the interest rate or the price.
Yeah,
they're hung up on
but because they associate an interest rate with self-esteem.
Interesting.
Yeah.
So
psychological.
Right, it really is, but it's 100% true because like the world's been kind of kooky for the last couple of years, right? There's been very little stability. Right. Every year it's something else, and the problem is you got to hold on to something. Interest rate makes you feel wonderful. Yeah. I locked it in. I'm never going to let this go. God. No matter what happens, I'm never going to let it go. So the refinances are pretty big, okay? And I would recommend it for anybody that's having trouble making payments. Like, okay, you manage, but every month you're like, dude, I bring in all this money and there's none of it left over. Yeah. What do I do? Well, maybe think about letting go of that interest rate. It'll be a month. For a month, you feel terrible. And then you're going to realize you're saving $1,500 to $2,000 a month.
Yeah, because your payment went down.
Exactly.
It's a little more comfortable.
And by the way, you actually get a bigger deduction on your taxes because now the interest that you're paying is tax deductible because it's on a mortgage instead of on a credit card.
Boom. Okay, so let's get back to the 1% conventional.
Okay, let's go. I'm sorry, we digress.
Yeah, so
we're really good about tangents.
Okay,
so
good.
We talked about the 100% financing FHA. We talked about the 1% conventional. There's one other loan that we wanted to talk about today. You go ahead.
The bridge financing.
Yes.
Bridge financing.
Yes.
Sellers, listen up.
Sellers, yes, this is very important.
Any homeowner.
So let's just say you've been thinking about moving and you want to sell your property. But a lot of times the way it was done, you got to sell your home first,
right?
Get out, and then go buy another property. And there's in between, you got to go rent somewhere or live with family or live in a hotel or whatever.
Free rent back or rent
whatever.
Back to the seller.
Exactly.
I mean, there's so many different scenarios.
But the end result is it's costing you more money or there's a lot of instability.
Right.
So what do we have a program? It's called the bridge loan. It bridges the equity of your current property with the property you're going to buy. So you can actually use, without having to pull out the equity out of your existing home, what you can do is take that equity and apply it to the purchase of a new home. So what you can do is, let's just say your current home value is $100,000, for example. Yeah. You're looking to buy another home for $100,000. What they do on a bridge loan is they combine the two values together. So we have $200,000. They usually multiply by 70%. So that's $140,000. And they subtract any existing mortgages. So let's just say you owe $30,000 on your current home.
Okay.
So they'll go $200,000 times 70% minus $30,000. You can go buy a home for $110,000, and you don't have to sell your current home. You can buy the new property, move into it, and then sell the home afterwards. So you're not homeless.
So much time
right?
and energy for people and peace of mind because we know moving is stressful.
Who wants their kids living in a hotel room?
Well, I mean, I can see so many different benefits to it. One is my little niche in new home construction. One of the things that new home construction builders do when they have a buyer is they want to control that whole scenario. Right. They want you to close on your loan on a specific time and move into the home. And that's frustrating for someone who's trying to sell their current home and make the timelines fit. It's a hard process. It's not impossible, but it's a difficult process to really maneuver and make it happen that dream picture way. So that's a nice effort to do it that way.
Right.
And then the second thing we know as agents is if that home is empty and vacant, people are going to be able to go and look at it more. Yep. They're going to get access to it. Plus, it's going to be empty, and they can vision themselves in it when a buyer walks through it.
Yep.
So having a vacant home sells so much faster, and it's easier. So there's so many benefits to that.
Plus, there's one other big one.
What?
If you're still living in the home that you're selling, do you really want strangers walking through your home?
Yeah,
touching
your
stuff,
underwear drawer.
Going through all that. I mean, we all have to do that as agents.
I like to do that sometimes because I like to see what crackers they have.
Yeah.
No, I thought you were going to say, look at their underwear. No.
I thought you were going to say you're going to pull Matthew Perry. I'm going to go through your medicine drawer. No.
Where your craziness
Yeah, exactly. Is. Tell us what your craziness is when you go to open houses. But what it does, it alleviates that stress.
Okay, I have a question.
Yeah.
Say you do the bridge loan, you already found your home that you're going to buy, and then the buyer on the home that you're selling falls out. How does that affect the bridge loan? Or does it?
It doesn't. You can go sell it to anybody else because you have a 12-month period to sell it.
That's what I wanted to know.
Yeah.
So the bridge loan doesn't have like a timeline on it.
It's got a it's got a 12-month period, and you can always get it extended for another 12 months.
If you can't sell the house in 12 months, I don't know, something wrong.
Yeah. So go talk to Alana; she'll sell it for you. Or Candace. So, but here's the thing: the key part is that the lender has no interest in owning your home.
Right.
And that's kind of a general, people say, well, I'm just going to do this, and if they don't like it, I have so much equity in my home, the lender can come take the home. You have to understand, the lender wants nothing to do with your home. They don't want to own it. They don't want to repair it. They don't want to fire sale it because they're not interested in being a landlord.
No.
They want you out of there as quickly as possible. So that's why these are really good loans. They're not meant to be a long-term solution, really a short-term solution, 12 to 24 months. I've gotten people out the next day. I've gotten people out in 24 months. But it is a great in-between solution.
It really is.
So you can move into your home, no stress. You don't have a spouse or partner saying, "Oh my God, we're never going to get into our own house finally."
Okay, another question on these bridge loans because I've been involved in one of these before. What penalties are to be paid to the lender, like if you don't bridge the loans, so to speak? You're bridging it, so you have to put your money down on the new home, then you're still in your old home. So what are there penalty payments or penalty fees or anything to do with that?
There's an interest rate associated with the loan.
Right. So you're going to be charged that interest rate as long as that bridge loan is open.
Exactly.
Got it. Okay.
And let's just say, for example, you don't pay off the entire bridge loan. Let's just say at the end there's $200,000 left over on a mortgage. Well, it's easy. You just refinance and put the debt on the new property.
Got it.
So you're never left just kind of like owning both properties.
So how much percentage is the bridge loan? What's the rate on the bridge loan?
It's usually about 9%.
Yeah, I was going to say it's
interest
a
only.
little bit higher.
Well,
it's a little bit higher. But it's an interest only payment, right?
Right. Yeah, it's an interest only. Let's go. Because it's, excuse me. Yeah.
The damn mimosas gotcha.
It's not meant to be a long-term solution. It's meant to be a short-term solution, getting you from one place from A to B.
Right. And the thing is this, right now.
Making it less hassle.
Exactly. Right now, there's a little bit less inventory out there, right?
Oh my God.
It's like literally like an all-time high of low inventory.
You need to move now. Right. Not tomorrow, not in a week. So the really cool thing, these things close in a week.
And aren't they at like cash? So
we're technically not allowed. They used to be able to say it as a cash offer. The new NAR guideline says it's a bridge loan. You actually have a bridge loan option when you check what kind of financing it is.
So when I go to write an offer with the bridge loan, how would I go and approach that with the other realtor who might not be familiar with bridge loan? How would I explain that to them to go, hey, listen, this is like a legit.
Yeah, we already have the financing in place to purchase this property, and we close in 2 weeks.
Simple and easy.
Yeah.
And honestly, I'm one of those people where I don't know if you like it, Pat, but I'm going to hand that information, your information, to the other.
And that's what you should do.
Contact them if you don't believe me.
And that's what you should do.
Because I'm not a lender, and I'm really bad at explaining lender stuff. I would rather send them to the source. And that's honestly our jobs as real estate agents is to guide people to where they should go to get the correct answers, because we're just here to sell property and show the statistics and contracts.
I always believe in specialization.
Yes,
I'm not a realtor for a reason. It's like I can't do what you guys do.
And I can't do what you do.
Right.
Exactly. So, I don't want to do what you do. I'm just being honest.
Well, it's kind of one of those things. You can either be a jack of all trades or master of none.
Yeah.
And to me, it's like, okay, let me do what I do best. I finance homes. You guys have the personality to go out and be with the client and show them 50 homes and figure out which one is the right fit. So, we all kind of have a purpose in this transaction. And it's, I've had a chance to work with both of you, It's very, what I can tell you guys is These two ladies are very direct. Pat, what is this? Pat, what is that? No fluff. Because,
Nailed it.
Yeah, but you know what? That's important because I'm the numbers guy. Without me, the deal's not happening for the money part.
Yeah, I want to know what's happening, when, how, where, what's the finish line. Let's get there. Let's go.
And just a little side note, she scares me sometimes. but no, it's. I actually like the fact that it's so direct. And people have called me abrasive, but no, listen, my job is to give you the numbers.
Yeah.
My job is to give you reality. Your guys' job is to sell the dream of the beautiful future home. My job is to sell, this is what the payment looks like. Can we do it?
And numbers don't lie.
Yeah, exactly.
Yeah.
So, there's no fluff in that.
Exactly right. So no, I'm in full agreement with that. But having said that, the opportunity is now.
Okay.
Whether it's a bridge loan or buying it 100% financing, buy now, because I don't think it's going to get any cheaper. And if anything, I think the lenders are going to get a little tighter going down as the economy maybe starts slowing down into the future.
Yeah. So 100% FHA financing, 3.5% credit, literally you walk into equity into your house.
Free money.
Yeah.
Free money. 1% conventional loan. What am I missing on that one?
Nothing.
And then, of course, last but not least, which is wonderful for a seller, is the bridge loan. So if any of these are of interest to any of you, Pat here will be of service. I will put all of his information up on the screen. Please reach out to him. He's available during business hours, of course. I mean, he does have a family, so
honestly,
there's a life outside of it.
Not really. No. I picked up.
Answer the phone.
Yeah, I've picked up phone calls from both of you at 7, 8 o'clock.
Driving down the road.
Driving down the road.
Your laptop
so here's the story. Candace and I were just in a deal right now. I'm driving home. It's like, Pat, we got to answer some questions. So literally, I am pulling over off of 80, trying to find a Starbucks.
You weren't driving.
Well, I tried to. I couldn't make it work. I had to have a laptop.
You can't do that.
I tried.
It's dangerous.
I tried.
Okay, and please don't ever do that.
No, I should. CHP. This is not for public consumption. But so literally, I pull over, and Candace and I and the buyers are talking over different numbers. Hey, Pat, what does it look like this? Hey, Pat, what does it look like that? Like literally, we're going through these numbers, and this is kind of what we do. So I know for you guys, this is what you guys do. This is all we do. This is our professional life. So trust me, when you guys have a question, there's one job that I say a buyer or a seller always has. Their job is to ask for as many questions as possible. If you're not asking questions, no matter how stupid it is, it's your fault. You should always ask the question.
I have a high school teacher that I will never forget. Rest in peace, Miss Mama Goss. But she said, never assume, because it makes an ass out of you and me.
Exactly.
Okay, so I guess with that, we are so glad to have Pat here today. Thank you so much for
all your information.
Yeah, all the market updates, these beautiful loans. Again, if you're looking for a lender, I'm pretty sure he can get anything done. And of course, looking for a realtor, Candace.
Yeah, these two.
Yeah. So we really appreciate you being here today.
Yeah, thank you guys for watching another